Wondering what a holding company is and if you even need one? Well, watch on. As a business accountant, my team and I spend all day long helping business owners on their journey. And one question that pops up all the time for limited company owners is, I've heard a holding company is a great idea. Should I have one? Let's talk about that. And actually, I thought it would make a great short video because for a lot of people, it's not something you need first on day one, but there are some pros to it as well as some cons to it, so I wanted to get those all in one video. So before I get into it, if you like these type of videos, make sure to click the subscribe button and the bell below to get notified whenever we release more videos just like this one. So what are they? It's worth talking about what a holding company is because it sounds really kind of like a complicated thing, but in reality, it's just another limited company. That limited company tends to sit often at the top of the chain. So if I drew you a little graph, you'd end up with like a company here that owns maybe a trading company here and another trading company here. So that's generally quite common, or in the early stages, someone might just have a holding company that owns their actual trading company underneath. So this is the one doing business. And this up here tends to hold things like cash balances, might go get involved in property, might have some shares, things like that. And quite often they're put up there so that you end up sort of ring fencing the liability here. So if anything went wrong with this trading company basically, and it was going well, let's say it's going well, it was earning a lot of money, and you can kind of send money up, you pay out some profits upwards to the company. If this one ends up in problems, then generally that's the end of that, and this one's okay. Obviously, if it wasn't the case, then everything in here is at risk. So that often is why people will put it in there, or they want to get involved with property, or they want to do something that doesn't make sense to have in this trading company. So that's why they tend to appear in what they are. But in reality, yeah, they're just a simple company. It's just quite often they end up in like this, not classed as a trading company. And that can have some tax consequences further down the line. But the question for me that's always on everybody's lips is, do I actually need one, especially from the day one? And the answer is really, it depends on your goals. It just depends. For example, if you're looking to sell the company, you see you're going to build it, sell it in a very short space of time. You might have it structured in there to begin, because if you imagine, going back to our sort of little chart, if you had the holding company up here and a couple of trading companies here, in order to get rid of one of the trading companies and sell it, it's obviously nice and more straightforward to a degree to just sell that bit off, rather than if you've got everything bundled in, you might have to separate some of it out and you only want to sell some of it. So like there can be a structural reason to have it. There is also, not normally, but there could be some tax saving opportunities if you've got ones that are making losses and profits and you can do different things with them. But honestly, the tax advantages is not something I would actually is the primary reason why we do it. Like I'm trying to think in the last kind of 16 years, I don't think I've ever suggested that was something to do for tax reasons. It tends to be for structure or liability or risk reasons, or there's some structural reason why that wants to be in place. So when you're thinking about it from day one, a lot of the time the answer will be, well, why would you need one? Apart from it sounds cool, right? But ultimately it's just going to add cost, because the con of it is you've still got another limited company. You've got to pay an accountant probably, nearly always, to end up filing all that stuff for you and doing the accounts. You've got the practical problem of if you've got different limited companies, they both are separate legal entities, they're their own thing. And if you start using the money as one big slush fund between the two, you end up with this thing called intercompany loans. Effectively, if you're using this company's money for this company, you sort of owe the other one back the money, and it can be a bookkeeping nightmare, and sometimes, and at least a hassle at minimum, to keep those records, make sure that both the records match. So you've always got a balance on there on both companies that have an issue. And if you imagine, if you've put it structurally in place so that this company's up here with all your cash and this one's down here in your risky trading company for some reason, if this company is owed money back from up here, if this one disappears, they're still going to, in a liquidation situation, want the money back. So a lot of time, if you end up poorly managing them and using the cash as one big slush fund, you can actually sort of defeat the whole point of having the holding company in there. So it really is like you have to be quite strict and think, okay, this is this company's money. Are we going to pay a dividend upwards, or are we going to loan it some money? If we are going to loan it some money, is it a problem? And if you're like, wow, I'm getting lost with this, that's because there is a lot to consider really with it. If you actually write the issues down on paper, there isn't that many, but practically on a day-to-day basis, what we've seen from our experience over the years is that, yeah, people forget that separation. They end up moving money back and forth with no consideration as to what the consequences could be long-term. So there are some cons around that, and just the practical bookkeeping, like keeping those things matched, and the cost. So they're kind of the main cons around that. So with that considered, should you put one at the start? For most people, the answer is going to be no. I think that unless you've got a very specific reason at the beginning that you want that, for most companies you won't need it. And the one thing that people misunderstand is that you can add it in later, Now, sometimes if your company's relatively substantial, you do have to get some tax clearance to kind of do this, but there's something possible called a share for share exchange, for example. There's multiple ways of doing it, but you might do it with this, which is very common, and you basically insert this company later and swap some shares around, and you have to write for tax clearance. Like, it's all possible, and then you've got it. And that's a very common scenario. So you can add it later when it really makes a difference. But early on, if you imagine you're trying to get your business off the ground, you've already got probably software subscriptions to this, accountants costs, you adding another company with another load of bookkeeping hassle, software subscription for your accountancy software, potentially your accountants costs, all these things. You're just adding a lot of costs at the beginning for probably not a lot of benefit. So there you go, that's what holding companies are generally. There are lots of reasons you might use them. They're kind of the most common ones in the small business scenario, and generally you're not going to be bothered about having one from day one. Please do share this with anybody that needs to know this info, and I'll see you in the next one.